crude prices is something that we have been, tracking closely. And from their September peak of about $99 or so, they have cracked, and they have cracked by about $20 or 20%. And they are currently below that $80 level mark, which was seen as a technical support for the crude prices. Now, for India, it's a big positive from a fiscal as well as monetary standpoint. But a lot of companies and sectors also stand to benefit now, isn't it?
Yeah, I'll give a broad outline. So they have, whether it's West Texas Intermediate or Brent, they have both cracked the $80 per barrel line. WTI is at 75.6 a barrel, and Brent fell to 79.8 a barrel.
So just below that $80 barrel.
So their lowest since July.
Right.
And they have this has overshadowed whatever is happening geopolitically across the world, whether it is Ukraine or it is Israel. Now, coming to India, India imports 87% of its oil needs.
That's right.
So a reduction affects India positively in most sectors. Also, because we import so much, this affects our foreign exchange reserves and hence the value of the rupee. So both in the positive, it's good. Now I'll come to sector wise. Let's look at the sectors that are affected positively. First, we come to paint companies. Now, paint companies account for more crude oil derivatives, and I'll name two of them. Monomers and titanium dioxide account for 50% of the company's total production expenses. Positively affected. The affected stocks mostly will be Asian Paints, Berger Paints, Kansai Nerolac, Indigo, and Sirca Paints India Limited. The next sector, which is a very obvious one, which is oil marketing companies. A reduction in oil prices shoots up their margins. So there is a no-brainer over there. And the companies that are stocks that are affected, these are downstream oil and gas companies. The companies that are stocks that are affected positively will be Indian Oil, Bharat Petroleum, Hindustan Petroleum. The third one is a pretty curious one, which people would not expect, are tile manufacturing companies. Now, natural gas is one of their basic production, is something that is a basic to their production costs.
Right.
Okay. 30 to 40% of their production cost is natural gas, and the rest is basically soil and clay and all those things. Every day, this industry consumes 70 lakh cubic meters of gas.
Oh, wow.
So this is very, very positively affected. In the Indian tile industry, just for information aside, it accounts for 527 billion rupees, and exports are comprising of 25% of that value.
All right.
Affected companies, Kajaria, the Lexus, Granito, Mudureshwar, Exaro. So these are and there is a tile cluster that is in Morbi in Gujarat, which will be pretty happy looking at these developments. The last sector that is will be affected positively is the aviation, for obvious reasons. 22% of their operating costs are from crude oil and crude oil derivatives. So SpiceJet, Indigo are the big stocks that will be affected. There is a sector that will be affected negatively also, which is basically the upstream oil exploration companies. The stocks that will be affected are ONGC, Reliance Industries, and Cain India. So mostly a positive impact for India with the reduction in global crude oil prices.
Right. Just to summarize what Amit has, in so many words broken down for us, it's a net positive overall since we are net importers, and certain sectors which use crude or derivatives of it as raw material will stand to benefit as their profit margins will go up. Whereas, certain downstream companies who are in the business of selling oil will stand to lose. Is that right?
Downstream companies will stand to gain because their margins will increase.
Yes.
Upstream companies which are into exploration and things of that sort, those will stand to lose.
All right. Let's also take this conversation across to Mr. Sudip Bandyopadhyay, Group Chairman at Inditrade Capital. Sir, very good morning. Always a pleasure speaking to you.
Good morning to you guys.
Now, we were just discussing how the drop in oil is a positive for India. However, the rupee has not really reacted to that or able to capitalize to that drop in prices. Why is that the case, sir?
Well, I think that's got to do with US, yields. and the differential between US yield and Indian yield, I think that also plays a significant role. That's, I think, the biggest contributor to rupee not adjusting to this oil price slide. The other factor I would say is that the sluggishness in the exports going out of India, and we have been seeing the data. I think the potential and the expectation of exports picking up is definitely building up. But as things stand today, with kind of slowdown in at least in Europe, and not a gung-ho growth scenario in US, I think Indian export is a bit subdued. So I think these two things are kind of contributing to the rupee not moving in tandem with oil price fall.
Good morning, sir. We named a few sectors that will be positively affected, whether it's aviation, whether it is tile manufacturing, paints, or downstream oil companies. Is there any sector, according to you, which should be more attractive right now to investors than the others amongst these?
Well, I think one sector, Amit, you also did mention is this, this IOCL, BPCL, HCL, which definitely start directly benefiting. And I think the margin accretion, the incremental margin which these companies are accruing on a daily basis is quite a handsome figure. So these are the ones which one needs to look at on an immediate basis. Most other sectors like paints and all, there is a lead lag. So the benefit will come with a lag. So the benefit probably will flow into the next quarter. I'm not sure whether immediately they'll start benefiting, because normally they have inventory, and these derivative prices come down with a lag. But I must warn the investors about one thing very clearly, that this is an election season, and IOCL, BPCL, HPCL, while they are enjoying the margin, there definitely will be a pressure at some stage for reduction in domestic oil and oil derivative prices as well. And the fancy margin or incremental margin which these companies are enjoying today because the global oil price is coming down may disappear very soon. So this is a tactical trade. This is not a fundamental trade which I'm talking about. So if somebody is planning to enter, they can enter and benefit, but one has to be absolutely on their toes, because things may change as far as these three companies are concerned very soon.
You mentioned IOCL, BPCL, and HPCL. Now, going by the simple moving average SMA, Bharat Petroleum Corporation on a 100-day SMA stood at 361.12. Now, there is a note aside. In a remarkable display of resilience and strength, several large and mid-cap stocks have surged past their 100-day simple moving average on November 3rd. These stocks have not only weathered market fluctuations, but are also showing a potential for further growth. What do you have to say to that? And BPCL is one of those 9. Adani Ports, of course, is another one, Eicher Motors, Apollo Hospitals. Do you think amongst these, Bharat Petroleum is something that investors should look at even more in a focused manner other than IOCL and HPCL?
Well, Amit, I have mentioned my views. I think short term, these are good. Long term, I won't really like to recommend these stocks to the investor. There are structural challenges with government still controlling the oil price movement as far as domestic market is concerned. So their margin is tightly monitored. The moment I think this situation becomes adverse, the reverse, that oil prices have gone up and domestic prices are not enough to cover. And if it is an election season, the prices will not go up for some time till the elections get over. So there are lots of pulls and pressures. There was this entire, divestment of, unrelated assets from BPCL, which was in the offing, but it was pulled back. So there are a lot of, factors which are not really market and I would say fundamental dependent as far as these companies are concerned. So I don't want to recommend to investors, because that leads to frustrations. We have seen this excitement getting built up in these counters many a times in the past, and which have resulted in investors not meeting their aspirations. So I'll be cautious as far as these government controlled oil marketing companies are concerned.